Well, good morning, everyone. It is 10 o'clock, so we'll call the March 9th, 2023 meeting of the Retirement System to order. Item number 2 on our agenda this morning is to approve the minutes of the meeting of February 9th, 2023.
Who's got this open if we can't get out?
Oh, so noted.
She can't get it done.
I'm not getting a vote.
Okay, hold on one second. Is it working now?
There we go. Okay, we have a motion. We have a motion and a second. Please record your vote if you can.
There you go. Yay.
Yes.
He said yes.
Item is approved. Item number 3 this morning is our consent docket. We have one item. We have a motion and a second. Please record your vote.
Are you? Oh, he says he might.
He's stuck.
He's stuck.
Oh, okay. Do you want to vote aye?
There it is.
Item is approved. Okay, let me catch up now. Item number 4 is to ratify approvals. We can take these with one motion. I have a motion and a second. Please record your vote. Item is approved. Item number 5 this morning is to approve the claims docket. Have a motion and a second. Please record your vote. Item is approved. Item 6 is to approve the following applications for service retirement. Have a motion and a second. Please record your vote. Item is approved. Item 7 is receive report of death, approve continuation of pension to spouse. Have a motion and a second. Please record your vote. Item is approved. Item 8, receive report of death, authorize payment of the $5,000 death benefit, and approve continuation of pension to spouse. We have a motion and a second. Please record your vote. Item is approved. Item 9, receive report of death, authorize payment of $5,000 death benefit, and authorize secretary to make changes to conform on the following. I have a motion and a second. Please record your vote. Item is approved. Item 10, receive report of death, authorize secretary to make necessary changes to conform on the following. I have a motion and a second. Please record your vote. Item is approved. Item 11 is receive investment consultant report. Good morning, Jason.
Good morning. So we have the monthly report and then have a recommendation on the investment policy following up on the asset allocation discussion that we had last month. It seems we're still talking about interest rates and inflation. That hasn't ended. Month of February, we saw the Fed, while slowing the pace of rate hikes down to a 25 basis point increase from the 50 basis point increases that we had seen, expectations for the terminal Fed funds rate went up in February, and expectations around inflation still remained elevated. As a result, we saw equities sell off, interest rates, intermediate to longer term rates went up. So for the most part, portfolios down in the month of February. The last 2 days with the Fed chairman's testimony in front of Congress, you saw markets get pretty jittery and sell off a bit more yesterday and the day before. And then today, we got a bad jobs number, worse than expectations, and the market was up, an indication that if we had more more people filing for unemployment than was expected, and that was looked upon by the market as a positive thing. I think this is a lot of noise. It's what we hear day in and day out, and certainly impacts portfolios month over month. It's important to keep that long-term time horizon in mind, which is what we talked about last month, and looking at your longer-term results. As a pension fund trustee and understanding that you have long-term liabilities and long-term asset allocation, it's just challenging as we go from month to month. That said, if we look on the left side of this page, upper left of this page, year to date, a couple of bright spots. Small cap and international developed are up mid-single digits for the first 2 months of the year. Small cap's up about 8%. Which is the Russell 2000. The EFI International Developed benchmark is up almost 6%, despite a challenging February. Worst performing asset class or market in the month of February was emerging markets. We saw a pretty big sell-off there, down 6.5% in the month, but still positive on the year. As we look at your portfolio on the next page in terms of asset allocation, roughly in line with targets. Overall, 13 basis points underweight to equities, but essentially in line. Slight underweight to fixed income. However, the cash component, because we raise cash for your operating needs, benefit payments, and to have a little bit of cash to cover potential capital calls that may come in. Today, that's not a drag. You're getting 4.5% to 5% on cash, so it's comparable to fixed income. So as we look at fixed income and cash, right at that 20%, and then real estate effectively at the target. A little bit overweight to core as we're continuing to build up the opportunistic piece, which is the Starwoods and the Blackstone commitments that you made in 2021 and 2022 that haven't been called down yet. We would anticipate that they'll start to call capital in the coming months. From a performance standpoint, on page 5, you'll see a month. So we did add, we've been collecting net of fee data. I know there's been questions, I think Brent has asked these questions before about presenting net of fee performance. One of the reasons why we didn't is because if we go way back, some of the separate accounts, fees are paid out of a different account, and we didn't see those fees, but we've been accumulating that data, and now we have 10 years worth of data. So you'll see for all periods except since inception, 2 lines, a gross of fee and a net of fee line. The since inception returns on the far right, particularly for some of those that go back, like large cap composite goes back to 1995, that since inception line is going back to January of 1995. So that's a growth. That's why you see blanks under the net of fee returns. But now we have 10 years returns, gross and net returns for all of these asset classes and the underlying managers. So it's a little bit busier, but hopefully this is a helpful view. So your large cap composite down about a little under 8% gross of fees, 8.14, slightly trailing the benchmark. Much of this has been Intech. We're trying to implement a benchmark risk-controlled allocation within large cap. The Intech strategy, say this over and over, I actually met with them last week. It continues, it's a volatility capture strategy, which mathematically is going to overweight the more volatile stocks within a particular index. In this case, it's the Russell 1000 large cap index. The more volatile stocks in that index from a price standpoint tend to be the smaller capitalized stocks. In a period of time it tends to outperform in periods where the smaller cap companies are outperforming within the large cap index and underperform when they're slightly underperforming, and that's what's causing this dispersion currently. Your overall small cap allocation, this is the combination of Earnest and Silvercrest now. Nice protection in a year where markets are down, a lot of that coming from Earnest on the more value-oriented side. Longer term, you see good results there. Long short equity, I'd say year-to-date numbers, we're getting positive numbers for the month. We're getting some protection. We've made some tweaks there. There was a little bit more beta and growth exposure within that portfolio that impacted the one-year returns, certainly, more so in the January, February time period of last year. We're pleased with the tweaks we've made. You don't see it on here, but if we look at this portfolio from mid-2022, let's say July forward, we've gotten nice outperformance in the up months and good protection in the down months over that eight-month period. This is an area that we had recommended last month when we did asset allocation work that we trim this down a little bit to a 5% target and bumping up private equity. You'll see private equity numbers now on a one-year basis. You're starting to see marks flow through. As we looked at 2022 performance, private equity lags public markets. It's not mark to market on a daily basis like your public markets, so it really was providing some, from a valuation standpoint, some protection. But you're starting to see marks flow through, and you've got a negative return now on a trailing 1 year. That said, longer term, if we look at the 10-year numbers, and these are net of all fees and management fees and carried interest of the partnerships, the 10-year return is 15.8% relative to U.S. large cap at 12.25%. Our target here is effectively 200 basis points above public markets for that illiquidity premium, and you've got that and a little bit more over this trailing 10-year period as your private equity portfolio has really begun to mature. I mean, early on, you didn't have a lot of dollars there. Now it's a much more significant piece at about 8.5% of the total fund. International developed combination of Harding Loevner and Lazard. It's been a bit of a challenge over the last year. Both Harding Loevner on the growth side, and like all of your growth managers were a bit challenged. I'd say Lazard is more of a high quality relative value. They're not a very deep value manager. As we compare the one area that worked last year, when we look at value managers that really outperformed, it's the allocation to energy. If you didn't own a lot of energy, you didn't do well. And so a lot of managers that are more high quality focused didn't own a lot of energy, and that's certainly impacted Lazard. Your fixed income basically in line with the benchmarks, and real estate, nice performance there. So no particular manager issues at this time. Unless there's any questions on the portfolio, we could.
Any questions for Jason? Okay. Then Chair will consider a motion on item 11 to approve the monthly investment report. We have a motion, a second. Record your vote. Item is approved. Moving on to item 12, items for individual consideration. This is approve the amended investment policy statement.
So Regina just pulled up the asset allocation analysis that we did last month, that we went through in detail. You'll note mix one was the mix that we were leaning toward and recommending, which would be a slight tweak to your current targets, reducing long-short equity from 10 to 5 and increasing private equity from 10 to 15%. There was no action taken last month. This month we came back with proposed modifications to the investment policy document that would reflect those changes. We pulled this up just as a reminder for folks. What this effectively does, it improves the expected return, the median expected return, improves the probability of achieving your 7% return over the time horizon, and doesn't incrementally add significant risk. It actually lowers the first percentile return, which is the worst case scenario, and improves the Sharpe ratio slightly, which is risk adjusted return. It slightly increases the standard deviation, but for a pension fund with long-term liabilities and a long-term time horizon, the difference, 14 basis points of additional volatility or standard deviation is pretty de minimis, coupled with the fact that from a valuation standpoint, in terms of funded status and contributions by the city, that's tempered by smoothing from an actuarial standpoint, so on the from a measurement standpoint. So our recommendation is to make a slight tweak to the policy, which is on, I think you all have a copy of the policy, simply on page 5 of the policy, making those modifications to the target asset allocation there in the middle of the page, reducing long short from a target of 10 to 5, increasing the target of private equity from 10 to 15, and just keeping those ranges at plus or minus 5%. Private equity, we kept the low end of the range a little bit lower just because it's not something that we can manage as cleanly. And at this time, no other proposed changes to the policy.
Any questions?
Just a couple of questions. So the trade-off basically is just slight decrease in liquidity. Is that fair?
Yes.
Okay. And the second, and you're comfortable with having a minimum of 5% private equity as opposed to 0?
I'm comfortable with it because you're at 10%. You're at
8 or 9, I think.
Close to 8 or 9.
Yeah.
I don't think it would get to 0. I mean, it would get to 0 if we just completely, if it's going to go to 0, We would be taking the target to 0.
Yeah, if it's going below 5, under this
Right.
policy would be the,
Right, you wouldn't be making any new commitments is the only way it's going to get there,
okay.
to fall below that.
Anyone else? Hearing none, Chair will entertain a motion on item 12. We have a motion and a second. Please record your vote. Item is approved. Item number 13 is comments from board, staff, and citizens. Regina, I have one question. Now that Mr. Lawson has retired and his seat is vacant, when will we start the process to take nominations for his seat?
We have obviously the vacancy, and we also have one seat up for reelection, and both of those materials will go out in April for nominations,
Yeah,
the
right.
beginning of the process.
Right,
Yeah.
okay, that sounds good, okay. Okay, hearing no other inquiries, we are adjourned at 10:22. Thank you, everyone.